The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How about that, Tiger Woods? Huh? So, you guys have heard me talk about perseverance for a while. Tiger definitely exemplified it in spades, don't you think? So, for those of you who are looking towards a long term trading career, perseverance is a key ingredient. Without it, the first period of adversity, you're going to fold. Okay. So, what's even more interesting about Tiger is he was on top. You're old, not that long term. Okay, Craig. So it's even more difficult. And I've known traders that were big, huge, successful traders that went into a period where, it turned out terrible for a while. Okay. And one of the biggest S&P deck holders and traders on the floor is still doing it, even though there's not much of a floor. And for years, a guy used to trade 100 lots without blinking an eye, is trading ones and twosies. And you know what? He could have a green jacket one day too because he's persevering. So that was really an inspiring real life lesson in persevering, not being worried about um, what people say about you. People were writing Tiger off for a long time. Even Tiger was writing himself off for a while, whether or not he could play again. So I believe it was a great real life example of not giving up. And that's a key ingredient, not only in trading, but almost any endeavor in life. Not that I've never given up, okay? But an example. So let's enough of the homily from Father Dale. I'm taking a shot up here in Aussie Kiwi, not because I'm bearish. We were talking about it down here. Blake caught it here. The whole chat room was short Kiwi on the central bank, and I thought eventually we could go to 107, and maybe we will, but I'm just thinking, a lot of people have gotten on the train since this key day. This was the central bank day. And really, we haven't had any type of fib retracement at all. It's just been grinding, grinding, grinding. And right now it looks like we're getting some non-confirmations. And perhaps the people that weren't here when ForexAnalytix was have joined the party lately. So just looking for some type of shakeout. I would love, and I don't know if I would be able to have the patience to stay short this long, but I would love a buying opportunity at 104.20. Hello, Hemet. How are you? So just something I'm looking at early on. Keep in mind, we have a shortened trading week with Good Friday. Yeah, that's right. Who's Aria? Who's the example, Bob? I'm not sure who you're talking about. Anyway, I'll get back to some of the analysis while Bob's answering me. So back to the Dixie, I've had a correction narrative working for a while. Okay. I still think there's a correction underway. I think that we're going to take out this low or challenge a low by the end of April. Okay, of course, if you want technical confirmation, and I pointed this out Friday, I thought it might take it out. But look how we held this moving average here on the daily, the 50. And I think eventually we'll penetrate it and go the 200, which is right around the 96 level. So I would sell dollar strength if it happens and manage risk over the breakout. Breakout this week's probably going to come in on closes over 97.40. Give me a Y if you're with me, guys. You don't have to agree with me. Just want to make sure you understand uh, the whys. Okay. So if that's a scenario that I believe in, then what does it mean for the majors? What it means for the majors is I'd be buying breaks in euro, all the way down to maybe 1260 if that opportunity presents itself. This was a big area. So far, we've held the 1290 level, but we could have some type of corrective pattern going on for maybe a day or so, a little bit of dollar strength, but I'd use that as a buying opportunity, maybe about 30 to 50 lower in this range. Because if the dollar forecast is correct, then euro's going to challenge this high, right? The pound's leading, which tells me I might have a chance to buy the euro cheaper. I just, you know, since Brexit and all the tape bombs, I guess I have an aversion to it. I haven't traded Swiss in a while since they pulled the plug either. It's a long way away. What is? Oh, the target in euro? Well, it seems like that because
I
of,
am.
huh?
Sorry.
What, Blake? Hi, Blake. Okay. It's a long way away. That's because, the new normal has been smaller moves. But when you think about it, Gerald, um, I don't know if you're talking about buying the dip 30 lower or so. But yeah, you have to wait for good entries. It may seem like a far way away, but it's really not a long way away to buy the break. And then if the scenario plays out and we're going to 114, it's really not a huge move. So even from here, it'd be 150 pips. We could get that, in a few days. Okay. Kind of like how we had it doing nothing, nothing, nothing. And then we had this spurt from 1250 to 1720 in a day and a half. Oh, the Dixie target's a long way away. You mean at 96? Yeah. 100 euro pips would do it, and the pound holding together. This feels like a long way away to you, right? All right. Well, that means that if it works, there's also profit potential. Anyway, okay. So yen continuing, have this little head and shoulders breakout. Now, I think there is a yen short setting up, but I'm not going to do it until I see yields peak. And I think there's going to be one more peak in yields and one more decline in yields. So I think I'd wait for yen shorts, which has been correlating pretty good with yields, right? Yields going up, US dollar yen going up. I think we could get to 260, 265, and that's when I'd be looking for yen shorts. Okay. And let's see what else to cover. The crude is trying to roll over. And I'll tell you why I'm not short. And I missed trades because of this. But you see this high here? And we do have some, on the 4 hour, really didn't have much divergence. Look at this, these two highs, plus pretty high readings. But that's not the main reason. The main reason is you see this high here, it's 64.64, right? And then we had a lower high, 64.55. And then we had this high on Friday, 64.53. So do you think there's some buy stops over this area? Okay, the 1 hour diverged pretty good right here. But I have a feeling that Mr. Market, and I could be wrong, maybe all those stops are safe. They've survived a couple of potential retests. But I'm pretty skeptical because I think Mr. Market is a pretty mean guy, and he usually likes to shake out as many participants as possible, especially before a turning point, before the move happens, and most likely without those people. So remaining patient to short crude. Also, This is really going to be the deal that seals the top for crude, and for me, it would be closing back under this wedge line, which it held once right here, and the moving average. So that's starting to come in right around 62.50. It's attainable. So we'll see what happens if we don't get the stop hunt, but we close back inside the formation. This is what I used to think. Oh man, I'm not going to do it here. I'm late. I shouldn't have waited for a stop hunt at 64.60. Um, now I'm not going to do it because I've already left 200 pips on the table. Well, that's not what I think now. So throw over failure back inside the formation. I won't care if I miss the beginning of the move, because some of the targets that a lot of people I respect are talking about, and there are people on the other side talking $80 oil too, okay? 70 to 80. But a lot of people I respect are looking for a pretty good bear move. So if we close under this wedge line, the fact that I didn't get short at the top doesn't bother me like it used to when I was egomaniac. Okay, everyone with me? Enough for you to chew on before I bring in the pros? Okay, so here's one of the best pros I know, Blake Morrow, who had his mic on and told someone in his household, I did already.
No. It was actually it was somebody, and I don't know what I actually hit the wrong microphone button, and it was in my office, and
Oh, okay.
we had one of our traders from Chicago come in, and I was saying hello, and I hit the wrong unmute button.
Okay, buddy. Sorry.
Yeah, sorry about that.
You're a multitasker. So how was the weekend? I know you love Tiger, not because of the personal life, but the same type of thing, Blake. And I know you're a golfer. How did you feel when did you
It
have a
was
chance
amazing.
to watch it?
I actually had tears in my eyes. It was so awesome. That was probably one of the true great sport comebacks of all time. I mean,
I second that.
It's amazing to see, between his injuries and his personal life, and
writing him off.
Everybody wrote him off. I mean, he'll never win another major. He'll never compete professionally. He'll never come back. And for him to go out and do it was epic. And
we hear that from even our loved ones sometimes. Oh, you're not going to be able to do all the voices of doubt, and even in our own heads sometimes we hear those voices of doubt. But what a great example, because we all at times in our life have to make comebacks, don't you think?
Yeah, all the time,
especially as traders.
Yes, absolutely. And so it was a really amazing feat, and it was truly it was amazing to watch. But yeah, as a trader, if you guys are if you ever feel beat down, I mean, that watching Tiger Woods come back and win a major championship, and and come back after 11 years of not, I mean, he hadn't won a major since before his son was born. Yeah. And, to watch him on the 18th, just hug his son. I mean, that's amazing. I mean, it's truly amazing. And as traders, we have to take that and go, man, that is truly a story of perseverance and work ethic. And that's amazing, because a lot of us, what happens, as traders, is we get beat down, and if you just cower and say, I can't do this, and it's too hard, and oh my gosh, you can. And I mean, believe me, I get beat down all the time, and I have days, and it's the amount of money that I trade now is much different than 3 years ago. 3 years ago, if I lost $2,000-3,000, I'm like, wow, that was a bad day, But nowadays, I multiply those by, 10 at least. And I have good days and I have bad days. And those bad days are tough days for me, and when I have because I'm the sheer amount multiplier that I use nowadays, when I take losses like that, I have to pick myself up on those days and come back the next day. And one of the and I'm gonna tell you guys that the firm that I trade for is a small firm, very exclusive. We have very few traders, and every one of them have been recruited, and they've been and I'm the new guy on the block. Everybody else has been there for north of 10 years. And they measure me not by the amount of money that I make, but how I react in an adverse situation. How if I take a loss, how quickly I come back, how quickly I get my crap back together. And that's their measure of me. And because the money comes, I've been trading now for the firm for a couple of years, and believe me, I've had my bad days. I've had horrible days, and I've obviously had good days too. So, but it's how you come back and how you fight back as a trader that means everything. And so if you can watch Tiger Woods and see how he comes back after that many years of being beat down and dealing with all the adversities he has. Like I said, it was not just his injuries, it was his personal life too. And he's really fought back, and you have to be impressed. There's no doubt about it. And on top of that, yes, I am a golfer, and I enjoy the game of golf, and to see him have his I don't know what you call it, the tiger-esque poise that he has, just it scared the crap out of the rest of the field too. You could see the fear in Molinari's eyes as Tiger was coming up from behind. I mean, it truly affected him, and the back nine, he just fell apart. And it's the intimidation factor. It's pretty amazing, guys. It really is. And like I said, you may or may not be a golfer, but it was pretty amazing. Anyway, and it was perfect to really talk about during this period of time, because really there's not a whole lot going on. We have very tight trading ranges overnight. If you haven't noticed, you look at the euro dollar. I mean, the euro dollar has had a 20 some odd pip trading range. But what I have to point out is that the dollar is still pretty weak. Stocks are strong. And, one thing before you start going, wow, I'm going to, start selling or I'm going to start buying dollars here and picking up some dollar longs because stocks look a little weak. They aren't. Stocks are still holding up right up against these highs. If I was short the stock market right now, I'd be scared out of my wits. You want to see a chart that just is very glaring to me? Go look at the Aussie yen. This is a multi-month breakout, and it's holding. Okay. We're at 2019 highs right now in the Aussie yen, and it looks like we're going higher. And so if you just think about that is what in the FX market, that is what we look at as a risk barometer. So it tells you really what the kind of breadth of the S&P is right now, and that means stocks are strong. If stocks are strong, I don't know if there's any real reason to be buying dollars right now. Okay. I really don't. look at the Aussie yen. And if you're looking at the stock market, you're like, oh well, the S&P is at the top of this this wedge here. It is, and frankly, it looks like we're going to break out to the upside. And until I see something really reverse here, I'm I know everything's divergent, blah 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 blah, but it looks like the S&P can still break higher. And if it's going to break higher and you're buying dollars, you're going to probably find yourself on the wrong side. And remember, if you are fading, like let's say you're fading the dollar right now, you're buying dollars, you're out there, saying, oh, I'm gonna pick up the dollar Canadian because it's cheap, or I'm going to sell the Aussie dollar because it's too expensive up here. If you're out there fading the dollar right now, don't stay wrong. It's okay to be wrong. You get in, you're like, oh crap, I'm on the wrong side. Get out quickly. But don't stick around, because if you stick around based on, these 20 pip trading ranges right now, and we're grinding in one direction, you lose 30 pips. How are you going to make it back? All right. Take your losses quickly in this type of environment. I know we talked a lot about that over the last couple of weeks, but this is it's very, very, very much the case right now. Now, obviously, if you guys saw the week ahead videos, I am really focused on a couple of things, and let me point those out for you in the majors. I'm not going to get in the weeds with the cross rates, because I'm going to let Steve and Stelios talk about some of those. But the euro dollar at 113.50. Sorry guys, didn't mean to yawn on you, but it's Monday. You got the case of the Mondays. The euro dollar at the 113.50. That's a key resistance, and that I'm watching very carefully. We get above that 113.50 level, and yeah, you ain't gonna want to be short the euro, I don't think. Morgan Stanley put out a piece this morning. That's one of their trades of the week, is long the euro dollar. It stops below, I forget what it was, 111, somewhere down here, but they're looking for 118. Just FYI. If you look at the cable, look, guys, this is a wedge, and I know we probed it on Friday, but we start breaking above 113 or 131.40, and the cable's gone. We'll trade up towards 133 again. And this is a market where you have to start looking at those cascading type events, and see if one starts breaking out, the other one might start breaking out, that type of thing. The Aussie is broken out, and if we get above this 200-day moving average at 72 cents, yeah, being short the Aussie, I don't know if you really want to do that. Okay, let's take a look at the Kiwi. The Kiwi dollar, I know I mentioned this during the week ahead video. We've broken this lower trend line, but in all actuality, we're still holding through support. We start getting back above 68 cents, that's going to squeeze. And remember, I'm talking about this because the stock market is just continuously grinding higher, and you've got the Aussie yen that's breaking out. It can drag the Kiwi higher as well. Let's take a look at the dollar Canadian. The dollar Canadian, here we are near support. Dollar Canadian is one, dollar pair that I would buy. It is, and I know I mentioned this during the week ahead video, it is $1 pair I would buy if I really want to be long dollars, because it is holding up relatively well. Flip side to that is, dollar Canadian starts breaking through the 133 level. This is going to expose, probably a move back to 132.50 or lower. So you got to be a little careful if you're long the dollar Canadian here. It is holding up okay, but like I said, if the dollar breaks down, it's going to break down everywhere. I think it's going to end up breaking down everywhere. The dollar Mexican peso. This currency pair is extremely weak, but CFTC positioning, it suggests that speculators are very long pesos. I wouldn't be long the dollar mex right now, but I am looking for reversal signs. I will have to see a really big reversal in the U.S. equity markets for me to, to start being long the dollar Mexican peso down here, or even considering it. But it is something that I think we need to, just keep in the back of our minds that the dollar Mexican peso, everybody's aggressively looking for a downside move, speculatively looking for a downside move in the dollar Mexican peso, and the boat's a little overweight right now. I'm going to leave the Nordic currencies for Steve and Stelios, but I do want to talk about the dollar yen. The dollar yen is, and like I said, I'm going to let I'll let Steve do all the cross rates here. But the dollar yen is up against some resistance, and we're at the 127% extension of this last move lower. We're knocking our head against it, against 112.10. But notice how it's not selling off. It's still holding up well. The longer it sits up here, the higher the risk of a break of this dotted line right here. Okay. The longer it sits here up at these prices, the more risk we are at a break above there. So if we can continue to consolidate it here another, 24, 48 hours, chances are we're going to be breaking through this 112.50 to the upside. All right. So, and I'm not long. I'm just pointing out the fact that it's squeezed and it's not going down. And what does not go down probably only has one other direction to go. All right. Well, actually, in this market, it could be two directions. One other one being sideways, because we're not moving very quickly at the moment. But you know what I'm saying. Okay. So with that being said, I want to bring in my colleagues, Steve and Stelios. Good morning, guys.
Morning, Blake.
Good morning.
How you guys doing?
Good. How have you been?
Other than not wanting to get up at 3 o'clock this morning, I'm doing good. I definitely did. And by the way, Coach was around and he said something. Somebody asked about Arya, one of the listeners, that he was referring to Game of Thrones.
Oh, I see.
And having perseverance. And by the way, Arya is a badass. She's probably going to die a horrible death at the end.
She's
of this.
the queen?
She's the youngest sister of the main family, but she was a little girl, and 10 years later she's like an assassin, and she's a warrior.
Okay, I know who you're talking about now.
Yeah,
I hope the incestuous relationship doesn't have perseverance.
Well, back in those times, in those days, and I mean, Greece just up until like one generation ago, very incestuous. So
one generation ago.
but the Greeks are pretty that. I mean, hey, I mean,
I think the Spartans and Athenians intermarried. Is that correct?
That and I mean, there's some backwoods people here in the United States that do too. So I mean, whatever. To each his own. Just kidding, guys. But anyway, that was really that was a question and more of a nod to the Game of Thrones. And by the way, I know a lot of people weren't happy with the first episode. I know I'm not going to spoil, but the one thing that I will say is last season they promised.
I haven't seen last season. No spoilers.
Well, no. Last season they promised that this season each episode would have been 90 minutes, and and it's well known there's only supposed to be 6 episodes. There's supposed to be 6 more episodes in this last season, right? That's a known fact. They're just wrapping up the story, right? Well, last night's season 1 was only 60 minutes, and I felt very cheated out of my extra 30 minutes of Game of Thrones. I'm not going to spoil anything. I thought it was good. I thought a lot of the stuff that was said needed to be said. So, and I'm just going to leave it at that. So, but some people were like, they were disappointed with it. And I'm like, I wasn't. I was so excited for it to be back on though. So it's, I think I would have been happy. It's like, we're in that old skit with, Eddie Murphy, the old skit where he was like eating, Ritz crackers. He's like, "That's the best damn Ritz crackers I've ever had." And because he hadn't had Ritz crackers in forever, or was so hungry.
Yeah.
The same thing with Game of Thrones. I think I would have been excited about anything because I was so excited for it to come back on. So no spoilers. I'm going to leave it at that. Hope you guys.
Well, get on your dragon and go make money.
All right, I'm going to go do that. So you guys have a great Monday, and remember, this is a holiday week. It is Good Friday, observed by most of the Christian world, which is a big majority of FX traders. So Friday is going to be even though the FX market will be open, no one will be around. Zero. So
will we?
So
no,
a great opportunity for manipulating the market, eh?
it could be, but we will not be broadcasting because, and actually, I think a lot of platforms, FX platforms, might even be shut down. I mean, it's so big in Europe and in the US.
Europe, it extends into an Easter Monday. They're closed.
Yeah, we will be broadcasting Monday. Sorry. So, well, I know, but we won't be broadcasting on Friday, just so everybody knows. All right, guys.
I'll be jonesing by then anyway, Blake. So.
All right.
Bad luck for you, coach. You're an American. Let's hold it for you.
What's that?
All right,
bad
guys.
luck for you. You're an American. Let's hold it for you.
No, that's not bad luck. I grew up in the sweet spot of the empire of the United States of America.
I agree with that.
Millions of people wanted to come here, and my relatives
speaking
came
of America,
here before
speaking of America and Eddie Murphy that he mentioned before, I will always love Eddie Murphy. For the movie coming to America. I've watched it like, I don't know, 15, 20 times. Every time, it's on somewhere, I'm going to just, watch it all. I can't, I can't get away from it. It's an amazing one. Yeah, honestly, it is.
So, Steve, what's on the radar, man? And Stel, what's on the fundamental radar?
As it seems, first of all, Blake is not sure that which one is coming to America. And second of all, he hasn't passed the screen. Good thing he's not Googling for me.
He's on the dragon.
Okay, let me steal the screen away from him before we see something we're not supposed to. Okay, there we go.
All right, so before we start,
but
I
what do we have?
I wish I had things to say, but really very little. We do have the RBA minutes in about 11 hours, I think, or something like that. So that's something to wait for. U.S. Empire State Manufacturing came in a couple of minutes ago, beat expectations, but really, who cares today with the markets being as dead as they are? I think the only thing that really is worth mentioning since our last webinar is another one of Trump's tweets, which I'm sure you've seen, Steve. But
I'm not sure it was an actual tweet or part of a comedy show, because
it was a tweet, and he did say, and I quote, "If the Fed had done its job properly, which it has not, the stock market would have been 5,000 to 10,000 points higher." And
I'm wondering if he refers to the Dow or he thinks that the S&P should be 5%.
And then he did say quantitative tightening was a killer, should have done the exact opposite. And it scares me to hear to read what he's writing. So he remains in the view that rates should be at zero, or they should be doing more QE. All this on the back of an economy which is doing great. And the economy is
absolutely the best economy ever. It just needs zero rates and quantitative easing, according to Trump.
I mean, he's right.
Which is the same person. It's exactly the same person. Candidate Trump was saying that this is a bubble economy. The stock market is in a bubble, and the Fed is playing political games.
Well, now it's his bubble.
Exactly.
And Stel, let me ask you, does his talk and the way he wants to stack the Fed with more and the pizza guy make you want to buy more silver?
Yeah.
Okay.
That changes
too,
nothing. It changes nothing to my long-term view. It changes.
Well, if he's successful, it'll change plenty. But I don't think the Fed switches gears until we have one break that takes out the lows of last year, and then I think they'll flip. What do you think, Steve, if that happens?
I think that we are in the last stages of a bull market that is now only based on, rainbows and unicorns expectations. Now,
I'm
is
talking about
that
an event that'll make them flip.
is that a timing signal? No, it isn't. But I agree with you. There will be some type of an event that will make the market wake up to reality, right?
Well,
And that's going
Bookbar
to be
says the Fed isn't data dependent; they're S&P dependent.
that's absolutely certain. I mean, if you just have eyes and monitor what they've been doing, it's 100% sure that they are S&P dependent. Simply, and you know something, I don't blame them. I don't blame them because they know better than anybody else that the only thing that keeps the economy going at the moment, besides rainbows and unicorns expectations, is the wealth effect. And if you take that away, that's it. There's nothing else that's going to keep the economy going. This is already an extremely mature business cycle that was based, on a huge extent on monetary stimulus, and everything has to come to an end, and this one will probably come to an end. That's not going to be pretty to watch. And unfortunately, for once again, I don't have any political stakes, of course, in the U.S. and I couldn't care less. I'm neither a Democrat or a Republican. I'm just a third bystander observer. Unfortunately, Trump was voted as a person that was not a politician, with whatever good that entailed. That he was honest, that he was straightforward, that he was blunt many times, but that was one of his pros. And he proved to be on this subject another hypocrite, because the exact opposite of what he was touting as a candidate, he's now saying as a president. Okay, and what has changed in between? Absolutely nothing at all. Not that it's a surprise to me. Unfortunately, it is the standard nowadays. But I think that we've now seen exactly what was his true beliefs pre-election, and that now what he has done is he has embraced the bubble, as you said, and now that it's his own, he just wants to keep it going and keep it pumping at least until election time 2020. Now, will they manage to sustain it until election time 2020? They will try to. Will they succeed? I don't know. My gut feeling says no, actually. So that's my point of view. And now we can go back to the charts. Rob says Trump is starting to point out that the Fed has been the enemy since its inception. Yeah, but how can the Fed? First of all, I agree with that. But second of all, how can the Fed be the enemy by being too loose or too tight on monetary policy at the same time? I mean, you can have the opinion that the Fed is an institution that has done more bad than good if you believe that in general it has been too loose on monetary policy and it has helped politicians sustain an unsustainable situation having to do with fiscal policy, which is a very good argument. But you can't believe both of them at the same time. So Trump cannot believe at the same time that Fed is not a good institution because it has been too loose with its monetary policy, before, and too tight now, because both can't be true. As simple as that, Rob. So yes, we can have the argument that the Fed, has done more bad than good since its inception, and it's a valid argument. But Trump cannot claim that by blaming the Fed, for two contradicting things at the same time. Okay, back to the charts. Now, we were monitoring this bear flag, on Friday, whenever it was, and they were saying that I believe that we're headed lower here in gold. So I'm gonna start from the metals and go through the whole complex, indices, FX, whatever. Of course, Blake hasn't covered. So if you want to ask any questions, as always, yeah, we will go over WTI. I see Gerald asking about WTI. We will visit that as well. So gold, obviously, it followed exactly the path of what we were expecting. I mean, I was expecting a rejection from 61.8. We made it a little bit higher, like $3-4 higher. Now we're depreciating towards 1280 once again. 1280, of course, can prove to be a support once again, as you see in the recent past, since the end of last year, 1280 has been multiple times a support level. Every single time it successfully managed to hold price. Will it do it again? No idea. But I can tell you one thing for sure: if we do break below 1280 as well, we are going to be finding ourselves at 1260, 1265 quite soon after that, because you can be certain about one thing. As coach would say, to quote him exactly, there is at least one stop below 1280. And by that, we mean there are like thousands and thousands of stops in long positions or limit orders to go short below 1280. And trust me, when those get triggered, that's probably going to accelerate the metals losses to the downside quite fast. And exactly the same thing applies to silver, having to do with this 1280, 1480, 1490 area, previous rectangles resistance, now acting as support. We visited that multiple times. It has held in every single occasion, but if and once we break below that area, silver is also going to be gone. It's going to be moving lower quite fast after that for the same exact reason I described, about gold. A lot of stop losses must be there. A lot of limit orders must be set there. And once that level is broken, all of them will be triggered. Brief outlook of the rest of the metals. Platinum is pulling back. I think it's a better idea of having a look at the platinum on the daily chart, because we actually drew there several days ago that, there you go, that we should have seen a pullback, which it actually happened. And if the bullish case scenario is to play out, this 875 level has to hold. As you see, and I very much like seeing confluences like that, intra-market confluences, let's call them. What I'm trying to say here is the following. Platinum is almost at a critical support at the same time that gold is almost at a critical support, at the same time that silver is sitting on critical support. What this tells me is that we are very, very close to a do or die area for the metal complex. So if you believe that metals are heading higher from here, this is the place you should be buying them. Exactly, this is the place and time you should be buying them. On the other hand, when you're wrong. I mean, you will have quite a tight stop loss. On the other hand, if these levels break, then we failed and we're headed lower. That's it, as simple as that. Now, palladium is actually not being driven by the same factors that the rest of the markets I showed are. Same with copper. That's why I left them, after making that synopsis. Now, palladium likely seems to be in a triangle here, which tells me that it should move lower towards, the next objective, which is 1265. It's a decent scenario, decent probability scenario. And copper, on the other hand, still consolidating. You can view this as a bull flag that has been broken, retested, and the market is coiling before we head higher. There is also, you can view it, on the shorter term chart as you can see it here, as a triangle. We're coiling within it. In any case, if we break above like 297, 298, we should be headed quite higher. First objective after that is going to be, depends on how you want to draw it. You can take extensions from this correction lower. You can take extensions from that correction lower. Regardless, we should be headed higher, above 3 to begin with. And if you have a look at it on the daily chart, I think we can easily end up extending towards this confluence of resistances at 315. So, this concludes the revision having to do with the metals. We can now visit crude. Now, crude pulling back from this area. Is crude broken? Not yet. Why? Let's go down to the 4-hour chart. There we go. Simply because so far this corrective move doesn't have impulsive characteristics. I see a little expanding triangle here. Now, if I see an acceleration lower and the break below 63, everything changes. But so far, this looks to me like a consolidation, so I wouldn't be ruling out another push to the upside. Bottom line, I wouldn't be advocating anybody trying to short it here, because you might be near a short-term low. I would definitely wait for more evidence.
You think there's a few buy stops, Steve, above 64, 55, 62?
Several.
You think you're going to let them make money?
And by the way, this is coming from me, which if you've been monitoring the webinar, I am short. I am short 1/3 at 63.50 and 1/3 at 64. So I'm currently in the money at 2/3 of a full position. And despite being short, I'm telling you that I don't see the price action I would want to be seeing in order for me to to get satisfied that this is a real breakdown and a real longer term pullback. Okay.
Okay. Well, Steve, this is a teachable moment. So you're short. You don't have conviction yet. Why stay short?
That's what I wanted to say before you asked the question. Actually, I mean, while you were asking the question, I'm thinking of booking the 1/3 of the position I'm short from 64, so I can book some profits here and keep my powder dry. Because let me be clear, and I've said it before, I am expecting crude to top rather soon. So even if we see another push higher, which still looks like a likely scenario, I still want to keep building a short position in crude towards 66. So what I'm thinking of doing is like booking that 1/3 of the short I have from 64, which is an okay profit, and nothing to write home about for sure. And this will give me more dry powder to short at higher levels.
When's
On
the
the other
last
hand,
time you wrote a letter? So, I'm saying you said there's nothing to write home about.
Probably when I was at my
at summer camp, when you were away at summer camp,
teens
hello,
or something
mother.
like that. Yeah.
Hello, father. How are things in Camp Granada? Is that one?
Hamid says, where do you feel it's going? I meant the metals, gold, 1280 lower or higher. Hamid, as I said before, 1280 is a key level for gold, as 1480 is a key level for silver, as 725 is a key level for platinum. So bottom line, if these levels break, which might do at the same day, because we're testing all of them at the same time, more or less, I think that all of those metals are going lower. But I wouldn't rule out a breakdown from, a rebound from those levels, which means that we're going to be at least range bound. Okay, so monitor closely 1280, because that's going to be the tell. Sorry, coach, what were you saying before? Little nice reversal so far, by the way, in the S&P, of course, extremely early in the day, extremely on the 4-hour chart here. I'm still monitoring this ascending wedge. Blake showed the same thing. Nothing to add here. I mean, we haven't seen what I said on Friday still applies. I mean, we haven't seen any real movement since then.
That's a nice rollover, though, and if it maybe negates it.
It is, but on the other hand, so far this price action
negates every
yeah, exactly. I mean, it's just a short consolidation for the time being. Yeah. Let me see. Steve, hi. Tell your opinion about Aussie Kiwi, Irina says. Absolutely. Let's have a look at about it, and then I'm going to tell you about my other trades. So Aussie Kiwi, first of all, holding up very nicely. I mean, we've had literally almost no pullbacks since we broke above this descending wedge. That's an extremely bullish sign. Second observation here to begin with on the 4-hour chart. RSI working off overbought conditions, sorry, as you see here. But, so far, it's just that, working out overbought conditions. So it's holding up very nicely. Even if we get a pullback from here, I think that at 1054 we should find buying interest once again. Now the next upside objective is the area between 1065 and 1067. Bottom line, I remain bullish in the short to medium term, even if we have even if we see, which is likely to happen at some point, like a short-term pullback. So I think that the upside for Aussie Kiwi is not over yet. We might see some short-term reaction, but I do think that the path of least resistance in the medium term remains higher, and you can also clearly see that if you compare any Aussie pair with the equivalent Kiwi pair, you can see very different price action between them. Aussie is showing much stronger lately than Kiwi does. Aussie yen, CAD yen. Yeah, CAD yen is one I wanted to speak about. I actually wrote about it in the chat room early today, and guess what I was showing in the chat room? This thing, this little pennant here saying that, listen, I think that CAD yen is ready to make the next move. We broke above this inverted head and shoulders formation. We're now consolidating in a little pennant. We were still in the pennant when I wrote that, and I think it looks good for a move higher. The inverted head and shoulders formation target is exactly as you see here at 86. And as you see, we are indeed breaking above this pennant, and I think we are on our way to the next objective, which is 85. Okay, so I think that the CAD yen trade looks really nice. I'm probably going to be moving my stop loss to break even, perhaps even today. So CAD yen looks good. Let's have a look at the Aussie yen that you asked about. There it is. Aussie yen looks good as well, because as you see, this little corrective move here might even be over. I mean, at the worst case scenario, I expected like a little bit of a deeper pullback towards this area. We might not even see that happen. Regardless, as long as we remain above 79.60, let's say, Aussie yen looks good to the upside for at least one more leg higher to the upside. The next objective is the 78.6 of this move lower, which comes at 81.05. So Aussie yen looks very decent as well. USD ZAR, I can tell you in advance before I pull the chart that the situation with USD ZAR is quite complicated, because we had this break higher from this triangle here, and we did see an initial push higher. We retested the 61.8 and we got rejected from there. Now, does that turn me bearish? No, it doesn't, because we still trade above this triangle. But one thing is for sure, I don't like this price action. I mean, USD ZAR does not seem to be having any momentum to go either higher or lower. I would still favor the upside, judging from this chart, but I wouldn't be getting involved with it unless, we see some momentum coming back in this market. So that's what I think about USD ZAR. Bottom line, I think there are better opportunities out there. You should probably be looking for something else to trade at the moment. Okay, let me see what else we have to talk about. Blake covered euro, covered pound. Yeah, let me go through the USD Swiss again. It's one of the charts I showed once again. I'm a little bit stuck on this pair because I think that it still looks very nice once it gives the technical signal. Here it is, USD Swiss. Still trading perfectly within this channel, and still, for some reason, makes me want to trade it to the short side. I'm not short yet, because as you see, there's this very nice support area at parity, but I do believe that a break below parity should be good enough for at least 100 pips to the downside to retest this low at the very least. Probably will be good enough for a move even lower than that. Okay, but at the very least, I would expect a 100 pip continuation. If and when that happens, I think it's a very decent probability that it's going to happen. Okay. Now, Blake mentioned the Nordic currencies before, so let's have a look at USD NOK. USD NOK. I'm still long just 1/3 of a position here. As long as we remain above 840, I have no reason to want to be short. That's a major level. If we go back to the daily chart, I've shown that chart to you multiple times. You can see how major of a level that is. I'm monitoring this descending channel. If we see a break above it, I'm definitely going to be adding to my position. Now, I'm probably going to be adding to my position if we also, drip lower towards 840, and I see a nice reaction from there as well. So I just have, a small position to make me, monitor it very closely, and I would be happy to add to that either lower if we see a nice reaction or higher if we break above this descending channel. That's exactly my viewpoint on that. Now, having to do with the other popular Nordic currency, which is the USD SEK, here it is. I expected a reaction when we retested that. We got that. Let me delete it. We got that reaction, and now we are within a triangle. So I wouldn't be surprised to see a resumption higher from this triangle. Okay, we're closer to the triangle support than to resistance. I have to admit that. Having said that, I wouldn't be doing much, but I wouldn't be short for sure. I mean, usually SEC has also broken above a major formation, and until proven otherwise, I think we have to respect the upside more than the potential of a reversal lower. Platinum as well. I did cover platinum, but okay, I can show you again very fast. What's this area as support? You see there is a nice rectangle here, 875 area, very strong support. As long as we remain above that, you have to respect the potential for more upside in platinum. If we do break below 875 again, I think you should be very, very careful following that. Okay. Coach, by the way, do we have an interview today?
Yes, Steve, we do, and he's here.
Okay, very nice. Okay, now let me see if we have any more questions. Last chance for questions, people. I'll give you 1 minute. Let me see what else I want to cover. Not much has moved today, so Bitcoin, Ethereum consolidating the recent gain, so nothing much to add there. I'm still along my last part of my. What is your view on DAX? I'm actually long the DAX. I mentioned that on Friday. I'm long the DAX, and the reason is okay. I put it up on the wrong chart. Here it is. The reason is you can see it here that we've broken above this flag here. So I'm long the DAX. I'm in the money, and I'm looking for at least a shorter move towards the 161.8% extension and this trend line resistance. So in the short term, I do like DAX to the upside. Did you say US index is down? I said that there was a small reaction on the 4-hour chart lower, but we're still consolidating near the highs. And of course, the chances remain that the S&P is going to push higher towards the all-time highs until we see something that says the opposite. Okay. Any ideas on USDTL? What is that? Sorry, Hamid, can you give me the ticker again, because there is no ticker with two Turkish lira. Okay. Sure, let's have a look at it. Not much that has been happening here, but let's have a look at that. There you go. It's been pushing towards the highs, but keep in mind that this move higher does not look impulsive to me yet. So watch this area currently testing resistance. If we break above that, the next area of interest is this one. Okay, at close to 6. Now let's also fib this. There you go. Let's also fib this. $38.2, a little bit higher than this level. So I would be a little bit careful here because the move to the upside looks corrective to me. So perhaps there is more downside before higher. Okay, from here, from there, I can't speculate exactly from where, because keep in mind that this is also very heavily manipulated from the central bank. So you have to take that into account as well. That's one of the reasons why we've had such an orderly move to the upside. Can you explain why DAX rallies despite euro strength, whereas FTSE is suffering from cable strength. Thank you. Yeah, absolutely. I'm going to cover that, and then we'll pass it to Coach to start the interview. The DAX is not doing well despite euro strength. I mean, let me say it oppositely. The DAX would be doing it. Would be doing even better if euro was not appreciating. Okay, so it's not that the euro strengthening does not have an effect on the DAX. It's just that you cannot see it because they both are moving higher at the same time. So it looks like they don't have an inverted correlation. But trust me, if the euro was flat or if it was dropping, of course, if it was dropping, not for a reason that would have to do with, the safety of the system or, any big issues with the Eurozone, in which case we might have been seeing both the euro and the DAX depreciate. But you can be certain about one thing: if the euro was flat or depreciating at the moment, the DAX would have been performing even better. So trust me, there is a negative effect from the euro appreciating to the DAX, but it's not enough to keep it from appreciating at the moment. The DAX looks quite good in the short term. As I showed you, we had a textbook bull flag, which has now been broken to the upside, and I even gave you an upside objective. So thank you, everybody. See you tomorrow. Coach, enjoy the interview.
Thank you, Steve. Okay, Mr. Privateer, welcome to FACE. I'm now making you the presenter. Looking forward to meeting you and want to thank you for taking time out of the slowest trading day of the year to join us. Welcome to FACE, Privateer. Here you go. Drop-down menu for mic, for screen.
Yeah, should be on. Can you see me?
Can see you, can hear you. Very nice to meet you, my trading warrior brother.
Nice to meet you, Dale. I'll have to say straight away, I appreciate what you do and what you say. Your consistency. I think I mentioned to you, I don't believe in God or whatnot, but I do really, really enjoy the way you start your day on a positive note with consistency and your value system. So thank you for that, even though you and I diverged a little bit there, but I appreciate that.
I bet we don't diverge about the perseverance that Tiger Woods showed in his career. And as a trader, Privateer, I bet you could really understand how you have to live through adversity and have the perseverance to win again.
Yeah. I couldn't agree more. I heard Blake earlier say he was in tears. A lot of us in the trading community can relate to that because in my mind, what is trading? It's basically a series of failures and how you get up off the canvas.
Wow.
That gives you a career in trading.
Yeah. So we all have to be Rocky Balboa, right, buddy?
You kind of do. You kind of do. And let me tell you my story. And one
Before
of the
you do, I'm curious, and maybe a lot of the viewers don't know, what is a privateer?
Yeah. What is Privateer FX, or what is a privateer?
No, what is a privateer? Because obviously you selected that handle for a reason of what it represents, right? So what is it?
I have to say, smarter guys than I selected it.
Okay.
We've got four guys here. The guy in Dublin selected it. He's got an acute sense of humor. I believe he says it's something like, "We are not pirates, but we are privateers," and it's some sort of British Anglo angle. I wish I could give you a better answer.
Okay, because most people would associate it with piracy, but what it is, I think, and you could check with your partner, it's someone who had their own ship, and I tell all the people I mentor, even though I share ideas, we're all captains of our own ship, but I think it's an independent ship owner who goes out and does commerce.
Treasure.
I think before they call them merchants, merchant shipping.
Yes,
they were privateers.
Right, I think you might be right. Even if you're not right, I'm going to take
treasure is the aspect, right? Okay, so you're seeking treasure in the FX market as a trader. That's a great handle.
That's basically it.
So go ahead back to your story and tell us about your treasure hunt.
Yeah. I'll tell you about my journey because a lot of people listen to me at the European Open, but there is a group of us. There's a fella, again, who's smarter than myself, who trades for the same family I trade for. We run managed accounts for one of, I would say, the more famous American families out there. I don't want to share the name.
Okay.
For their sake. They are very, very old-fashioned, discreet group of people. So we'll just leave it at that.
Someone once told me, privateer, and I even had to really worry about it. And I certainly didn't take their advice with, being on social media. But he said, Dale, make your money in a closet.
Yeah, or the nail that sticks out gets hammered was what I told him.
You have as many of them as me, so you have privateerisms.
Yes, exactly. Anyway, so there's a group of us. It's not even really clear where we're going to go with this privateer, but what we do with it is there are a team of risk takers in America, and is a team of risk takers over here in Europe. And one of the reasons I put my ideas up and I do my morning resume is after 30 years, I don't like to listen to other people. But the young guys in our firm do like to listen to me, or are told to perhaps listen to me or whatnot. So this is a really good framework for, you can hear me speak. I don't have to hear you speak, which just usually annoys me. And you can see what I'm thinking real time. And so this is why we have privateer for now. I don't know where it's going. So that's just a little bit. A lot of people are like, well, what are you going to do with privateer? I have no idea. Right now.
All right.
Right now,
when you were a young guy, like the guys you talk to now, who were you listening to?
Yeah, I started in '91. So I was a New York City market maker in European currencies. I worked for 3 different banks, was fired from each of those jobs.
Why?
And I worked during a period. Well, I'm quite bad at following rules. I'm a bit of a rule breaker, law breaker. I wouldn't say law breaker, but I just don't like to be told what to do. And
yeah, compliance can be restrictive.
Yeah, and then the position limits, and and I was a smart ass. I was basically a Muppet, but you could survive back in the '90s as a Muppet because of the spreads, right? So everyone thought they were great traders.
Yeah, you're right.
Because we had massive spread back then, and so I was a market maker, and I became like a lot of market makers back then. If you work for the right shops, I did some very, very serious volume at some very, very key times. Like one of the reasons I became somewhat known was, again, pure luck. I got paid at the all-time highs in Mark Lira. I don't know if people probably don't even remember this, but this is before the euro.
Yeah.
Made $1 million, pure luck, made some price out of my ass. The guy pays me. It's the all-time high. But those are the kind of moments where you develop a little bit of a reputation and you see some more flow. And I always consistently made money, but I also always consistently broke limits, rules, overnight limits. I was just basically, sort of a bit rebellious during that time.
Okay, I have a question for you, and I'm kind of a maverick myself, but you know what? The market can humble anybody. And if you're the type of person that, breaks rules, breaks limits, it's kind of hard to drive a taxi cab, even if you're a great driver in New York, and not get a traffic ticket. Didn't you have a traffic ticket with that type of psyche and mindset? Have you ever blown out any? Have you ever had a bad year in a day?
Absolutely. During those days, my VAR, my value at risk during the day, was absurd. But of course, again, it got obfuscated by the spread. So
okay,
I always made money.
All right. So what Privateer is talking about is during, pre-internet, where everything decimalized and everything, and when you used to have even open outcry, brokers could make money. They were, a quarter spread. There were bigger spreads, and a lot of guys got rich. And then when their decks were taken away, to stay in the business, they had to learn how to be right in the markets, and many weren't able to make that transition. Sounds like you were able to.
Yeah, I'll segue into many is one of the greatest understatements of all time, Dale. 99% failed. I can think of 100 guys that I shared those New York years with.
Yeah.
5 are dead.
Yeah.
90 are out of the business, and there's maybe 4 of us left. And what's odd is the 4 of us that are left weren't really the heroes. We were guys who just worked our asses off and kept learning our craft and kept failing and then fixing it and then failing and then fixing it. So imagine me, I've been fired from every job I've ever had in trading. And some guy calls me up and he goes, listen, New York's not too healthy for you. You should move to Europe and we should trade PA together. And we'll leverage our money 40 times and we'll just sort of travel around the world trading PA. And again,
wow,
I was so stupid that I thought I could do it. You know, I didn't realize how hard that would be without any spread and pure alpha, et cetera, et cetera, et cetera. But the guy who asked me to do this turned out to be kind of a superstar, probably the single greatest pound per pound trader I've ever met. And this is the guy who really taught me my craft. So I just dropped everything. Got lucky. I did get lucky, and this is part of everyone's journey. There is some luck.
Okay, I call it providence.
It is. And if you surround yourself by great people, which I try and do, you can kind of make your own luck in a sense, you know, like, you know, there's a reason this guy and I were friends. We shared humor. We shared a lot of things, but also like, I was no dummy, right? The guy was one of the best traders in the world, and you want to learn from these type of guys. And to make a long story a little bit shorter, so I moved to Europe, no papers, no insurance, nothing, $40,000 to my name. We leveraged this money up 40 times. And then over the next 3 years, I'm kind of traveling around the world. So every 9 months, I'd move to a different city, Paris, and Biarritz, Singapore, Geneva. And he was also moving around, London, Tokyo, Toronto, and
what an adventure.
Yeah. And he basically taught me risk reward and how to trade and the key features in being a professional trader, which number 1 is never lose your seat. So risk is premium. And you can imagine when you're 40 times leveraged, you can never make a mistake. Never. So we sort of developed this system where we would get into trades, what we would call free trades, similar to what you do, I think, Dale. You're a Forex stop hunter. We see these weak points in the market. And if you just get long or short at these weak points, you can kind of get a free trade. And so if your downside is close to 0 and you have the balls to hold it, you can make a fair bit of money. And of course, it was a lot easier to make this money pre-algo and this volatility. You can't really do that. But we did that for 3 years, and we made a fair bit of money. You know, doubled, tripled, quadrupled our money, including our lifestyles, which was just all on a credit card. We didn't have bank accounts. We just had one Visa, and then we would pay cash, 9 months cash in advance for rent, and just move from place to place. But then eventually, you know, some people kind of saw us, and they asked us to do a hedge fund. And this is where also luck and falling down and getting up works again. So we took another partner. There were 3 of us, and we started this hedge fund with $1 million. And all these people who said to us, "Oh, you guys should start a fund, you know, and you're pretty known now, and you're a known commodity." Then we asked them for money. They all said no. Every single one of them said, "No, your track record's not long enough. You don't have enough under management. You're too young." Because mind you, I was 30, and these other Muppets, they were 27. So we were youngsters at the time.
Mm-hmm.
So
actions speak louder than words. Easy to say, you know, you should start a fund. We'll participate. Yeah, cutting the check is another thing, isn't it?
That's exactly it. But here's the thing. Again, it was part of our stubbornness and part of our just general stupidity. We just believed this was going to work. So we just knocked on 250 doors. And the first 249 doors all said no.
Uh-huh.
It took a year. We spent, I don't know, 70 grand of travel and entertainment in London, New York, Geneva, Zurich, Tokyo, where we had connections, of course. We were all bankers, and these guys who I were with were even somewhat famous. They all said no. And then one guy finally said yes. And he was like from a biggish name, at the point where we were like, this is,
Ready to give up.
Yeah, just about to give up. And to the point where, you're at the Sanderson Hotel. It's a Thursday night. You're at the Sanderson Hotel in London with your partner. The third partner doesn't even want to come to this meeting because he knows the guy's going to say no.
He can't handle rejection anymore.
Yeah, and we probably had too many mojitos. We, typical night at the Sanderson, and we show up like a big groggy 8 o'clock in the morning at one of these London shops. And this guy just goes, all right, you're done here. And then it just cascaded. And for 7 or 8 years, we ended up raising close to $1 billion. And I'm not saying that because blah, 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 $1 billion. What I want to say is over that time frame, it was, again, a series of massive failures. So
you learn the most from your failures. Okay.
You do. And this is what I want to.
Go ahead. So
this is what I want to tell the internet here, because I'm now getting a lot of people who are coming onto my Twitter saying, "Oh, can you help me with this? Can you train me with this?" And I want to say that, number one, Malcolm Gladwell's 10,000 hours works for some, but it took me 30,000 hours, to become great at this.
I never heard of that 10,000 hour thing.
Yeah, he basically said in order to become, professional quality at anything, you got to put in 10,000 hours, which is basically 5 years at 10 hours a day.
All right, screen time.
Yeah.
And you can't learn experience. It only happens with the passing of time and living through stuff.
Correct.
Okay.
And as you said, your failures teach you far more than your successes. But you can imagine, again, here come the failures again. So you do great with $4, you can trade $8, and then you got to trade $50. Then you got to learn to trade $100, and then you got to learn to trade $200. You have no idea. And what works on 10 million certainly doesn't work on 50 million as well, and certainly doesn't work at all on 200 million, et cetera, et cetera, et cetera. So again, it's these series of failures which teach you how to change, how to evolve, how to get this thing done. And it's incredibly hard. Like, everyone glamorizes this business on the internet, on the Instagrams, on the things.
You mean the $10,000 millionaires that rent a Ferrari and a private plane and are sitting on a beach with a drink? Them?
Dale, you and I are putting nails through our temples when we see that bullshit. I mean, it's unbelievable, but people believe it, and it's sad, because I get direct messages from people all over the world now, and I keep trying to tell them, dude, you have no idea what you're getting into. You can't just start this at 41 years old and then think you're going to be a millionaire at 42, starting with $2,000 and zero experience. So the reason I'm telling my story is it is freaking hard. It is really, really hard. And
it's
the business,
a tough way to earn an easy buck, someone once told.
Yes. And I have 2 daughters, and there's 2 things I won't let them do. They won't become ballet dancers because I don't like the whole ballet industry. And they
can't hurt their toes, man.
You don't want your daughter. That's right. And they cannot become traders because it's too hard. It's too hard for the normal person because you have to live this abnormal life and learn to react to things in an opposite fashion that's normal.
Do they have to marry a doctor or a lawyer, privateer?
No, they can do whatever. Those are the only 2 rules. And I guess they probably... No prostitution, I guess. 3rd rule.
You are a character, man. I'm so glad I reached out to you. All right. So, we've been talking here. What a great story, and how fortunate you were, because you talk about, the trading floors aren't there. That was a great place to rub elbows with pros and hang out with pros and all the charlatans on the internet. And, you compared, and even though it was a tough road, at least it was a road that wasn't a detour to hell. And a lot of people, turn, I will sell you the secret of trading for $5,000, you know, and
Yeah.
you just told everyone what the secret is. Hard work.
Hard work and stubbornness. And, you know, every time you get knocked down, every time you're in the fetal position in the dark on a Saturday morning because you can't believe just what happened, the illogical move that just happened, or they ran your stops, you're 80 points in the money, and now you've scratched it. All of these things are real, and people need to get that through their head and be super, super careful.
How do you protect your health, Privateer? You talk about all this stress, and we know what stress does to the body. So, you know, I think that's an important thing too, because, you know, I had a major health issue, right? So,
yeah, I heard that. Heard about that. Yeah.
Yeah. So, what do you do? Do you train when you make sure that you live you know, an athletic type lifestyle to be in a peak performing state, which is difficult to do every day? What's your routine?
Yeah, I think I again should tell the full story, because I could tell you the varnished story and the beautiful story that I'm in peak condition and I train every day. In my 20s, I used alcohol to run away from my problems. In my 30s, it was less, but still. And it wasn't until my 40s that I realized that the most sensible way for me personally to survive this business was to do fitness in nature. So I, of course, live in Switzerland.
Beautiful. Nice.
I take the road bike out, you know, these 10-speed bikes, and I ride uphill in them. That's what I like to do. I like riding up the mountain. It's a great metaphor for pushing the rock and for trading.
Yeah.
And I also ski. But when I ski, I don't ski downhill anymore, because when you're in Switzerland, that gets quite boring. I walk uphill. So again, I do ski touring. And oftentimes I do this at sort of 5 a.m. So pre-sunrise, and you want to get to the top of the mountain at the sunrise, quite invigorating. It's the one time of my day where I'm not thinking about Eurodollar or implied vol or when ES is going to turn or OPEC this week. And that's the way I survive the stress. But also it's a little bit easier for me at 50 because, you know, I kind of have the fuck you money now. So my trading now is just also a little bit different. And I'm not saying that to be like a jerk. I don't want to be a jerk. I just want to be honest with people that it's hard. And I couldn't have done that in my 30s and 20s because it was a 20-hour day. The phone rang all night. I took fills at 3 a.m. You couldn't get up at 5 and go on your bike because you were smoked. You were exhausted the whole time. For decades, I was exhausted.
Okay.
So I just want to throw that reality check out there to people.
That's a great story. So really great content in this interview. So you chose to show the S&P chart. Were you long? Have you ever seen, and you've been around for a while, a market break the way it did in December, the worst year since 1931, worst December since 1931, and rebound with such magnitude without one correction?
No. Well, I mean, we did see it obviously in 2007, 2008. And this is the story I'm going to tell today. I'm of the camp that this is thin air. This has to turn. I agree with your colleagues that we're waiting for this event. And until this event happens, your yen crosses, and I hope you guys are right on your Aussie yen cross trade, but I'd be a bit nervous being long Aussie yen, being long any risk metric here, because I do believe it's in thin air. Let me just, I guess you can see my screen. I'm on the weeklies here.
2925 was a number an excellent wave guy put out guests I had last week. So watch that number. But
I'm going to go back. I'm going to go back, and I believe a few of our viewers, actually most of our viewers or listeners, probably have never even heard of Paul Tudor Jones.
Oh, he's my hero. All the big money's made at the turns.
Of course. You and I know him. He is our hero. He's our Michael Jordan. He's our Wilt Chamberlain.
And Blake trades for Gelos. And Gelos, they trade Tudor's funds.
Nice. Nice. So you guys know him, but the youngsters probably don't know him. But he made a load of money in 86 with this same type of idea, in a sense. So we're looking at the weeklies now. And we're going to go backwards now in time to the last time there was a turn. So I'm going back 2007. So you see up here, 2007, we traded up to 1564, and we had this move from 1233 to 1564, this 20% move in a straight line. And that was July 2007. And then we had this massive move down, very similar to our December move. If you think even in percentage terms, that's 20%. It's 15 to 13. It's 200. It's 200. Yeah, it's 200 S&P points at 15. Yeah, it's like 16%.
Right.
And then you see this magical mystery tour here, where we just clip the high.
Yeah.
We just clip the high, and then you get your turn. I'm of the idea that I'm not sure we're going to clip this high. So now let's go back to present day, all the way back to present day. So we've had this move up, this insane move up. We've had this move down, and now this move down, the second move down in December. I'm of the mind that we could barely clip this 2950.
Okay.
And up at 2950, I'm on red alert. Any negative sign, I pile in. But I have a feeling, because of the Barron's cover and because of basically the general, I would say the general flock right now has just given up. And everyone's like, well, it's just going to float higher. Well, it's going to go higher. The Fed's gone dovish, yada, 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 blah, blah, blah. Oil's going to 80.
Trade deals happening, da, 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 da. Yeah.
And so, but in fact, that doesn't matter. My point is right now, and in even my morning video today, you know, we run a tactical book, or I run a tactical book and a directional book. My tactical book is supposed to make money every day. And I make money sort of 58 out of 60 months, like clockwork, in my tactical book. And that's small money that's supposed to smooth out the directional book, which pays the bills. And as you know, for someone who's been around, and for all you youngsters listening out there, the 4 days a year, the 4 obvious days of year, is how the pros make their money. That's where we get paid. When cable broke 190, I repeat, 190 back in the mid 2000s, and euro went down from 160, that's when we got paid. The rest of the time, we were just breaking even, making small profits, not losing our seat. This is going to be one of those times where when this turns, you just have to be ready for it. So you're just on high alert. You're not fading this, or if you are going to fade it, like today, I'll be selling sort of between 29.18 and 29.23, kind of what I would consider a stretch high. If I don't get paid, I don't care. If I do get paid, I will then trade it on the short side for a better average to try and scratch some cash in the S&P book. But what I'm waiting for is a daily, now we're in the dailies here, is a daily move that's going to tell me something. This day here, March 22nd, is one of those days. We almost bearish engulfed. This would be a day that I would be like, oh shit, something's about to happen. And then I would look around, see what the story is, and decide whether to pile in. I'm waiting for this type of day, and it could be a long-tailed extension high, close at the same, you know, doji, tombstone doji.
You want a negative candle to tell you.
Yeah, or it could be the Uber IPO. So Uber IPOs, and everyone smashes it.
When is it?
That is a good question. I don't even know. It's coming up because I've seen it in the media.
Okay.
Let me see what they say. It's soon.
Okay.
Or it could be Google getting sued by the Europeans. We all saw that in the FT this weekend. There's now a tsunami of litigation. I stole that headline from one of my news feeds. Everyone is now suing Google in Europe. And why does that matter? If Google turns and then we all start hating Facebook again and the whole FANG complex turns, that could be the catalyst.
FANG has had one of the weakest responses. I mean, they were broken and they've come back a lot, 61.8, 78.6, but not close to making new highs like the S&Ps. And the NASDAQ is close to new all-time highs.
Yeah, but as you know, like a weak return is another sort of signal that we're running out of strength, but it's not the signal we need to hammer it. And this is the difference between sort of senior traders and junior traders. Junior traders are always trying to hammer it. We are paid to wait. And imagine these stories. And if you imagine enough of these stories, one of them actually typically comes true. And then you're like, oh my God, I've been thinking about that story of the 10 stories I've been thinking of.
Mm-hmm.
Slap yourself in the face, put on your big boy boots, and hammer it. But until then, either don't trade, which is like what a lot of the pros are doing right now. The risk reward on risk on looks a bit squirrely to us. So we're not super.
Tom Petty, the waiting is the hardest part.
Yeah, it's so hard, and a lot of us, are addictive personalities and we're workers. So you got to keep yourself busy. I mean, one of the things I do to keep myself busy is I read. And I don't read technical stuff or autobiographies. Sometimes I just read a book with loads of sex in it and like some murders. And it just keeps me entertained and away from getting into trouble trading dollar CAD between 133 figure 10.
Yeah.
Anyway,
I'll tell you, what a great interview. And what's great about it is when you could combine compelling content and having fun at the same time. So, like I said at the beginning of the interview, and you're anonymous to me, you're just Mr. Privateer FX. You're also now, like it or not, buddy, my trading warrior brother.
Dale, thanks. I'll let you go on that note. I appreciate you finding me. I hope it was helpful.
It was great. Great story. You know what? Here's a suggestion. Let me mentor you. You not only should read, you love to read books. You have a book in you. Write it.
Yeah, I've been told that by a lot of people, but I'm too tired to write
a
book.
Too lazy. I know. I know, man. I know. But you know what? If you really want to pay it forward and reach a lot of people, and I know it's hard work. I've tried it too and have thrown in the towel. I'm kind of like a sprinter. I could write a chapter and that's it. And it's kind of a thesis. But you have a great book to share with people on your journey in trading. Just telling you, I've interviewed over 1,000 people over the last several years, and you have a very good story. And it was a pleasure meeting you.
Here's one last thing, Dale. And one of the reasons I'm not writing a book anytime soon is, and I want to get your opinion on this. Youngsters don't listen. Can you comment on that?
I believe the reason they don't listen is because they only text. and texting is silent. So,
it's the lowest form of communication, right?
So it is. And try and have a conversation with them and get them on the phone. And there's almost a fear of meeting people in person that they need the protection of a device.
I couldn't agree more. This is one of the great things we need to fix in our society. Anyway, I've said enough. Thank you for your time.
I'm an open book, man, as you can see. So I want people to learn from my life because I didn't. Anyway, buddy, great meeting you. Good hunting. And I'm on Bear Alert and S&Ps over the next week or so. Thank you for your time.
Thanks, Dale. Good luck out there.
All right, everyone. That's Privateer FX. You could follow him at Privateer FX. I know I'd want to see his videos and pay attention to what this guy is doing. That's a wrap. Remember, don't just count your pips, count your blessings. You're very welcome, Hammett. You're very welcome, Mark. Everyone loves you, Privateer. And we'll see everyone for Turnaround Tuesday. Adios.
Cheers. Ciao.
Cheers. Adios, buddy.